The cash flow statement is another important financial statement to look at on a monthly basis. It indicates the change in cash, so cash inflow and outflow for each period. Now, why would this be important? Well, if you think back to methods of accounting, when a company is on an accrual basis, they are going to record income when they've signed the contract if they've earned it, but they may not have actually gotten the cash. So you can see whether or not the company received the cash in the cash flow statement. The cash flow statement is organized into three primary activities: operating, investing, and financing. Here is a sample cash flow statement. As you can see, at the top is cash flow from operating activities. Then in the middle, you have cash flow from investing activities. And then at the bottom is cash flow from financing activities. So this is tracking the change in cash inflow and outflow in these different categories. The cash flow from operating activities considers all of the business operations of the company. And basically what it does is it starts with net income and then it reconciles all the non-cash items related to the business. So for example, accounts receivable, where a client owes you money, but it's actually no cash was received. So it's a non-cash account. So the cash flow from operating activities will adjust for these non-cash items. Now that we've gone over cash flow from operating activities, I thought it would be helpful to look at the sample cash flow statement. So there you can see at the top is net income, and then it's add, bracket, deduct the non-cash expenses such as accounts receivable, depreciation and amortization, etc. Cash flow from investing activities includes cash spent on capital expenditures or CapEx. So what is that? That's typically, property, plant, equipment, leasehold improvements. Most investors, when they're looking at the cash flow statement, they really want to see that their company is generating cash flow primarily from business operations and not from investing and financing activities. Here you can see on the sample cash flow statement, cash flow from investing activities. On this example, the company just has leasehold improvements. The cash flow from financing activities is the section where if you raised any money, either through convertible debt or equity, this is where the section where it's going to show up. You'll see the cash for this equity or debt flow through this section. In addition, you'll see any kind of changes in cash related to dividends or share buybacks in the financing section. On the sample cash flow statement, at the bottom is the financing section where you can see that in this example that there are distributions, so they've deducted the distributions from the cash flow. To make sure everything is sinking in, I put together a quick quiz, so I'll give you some time to go over the questions. And then on the next slide, we'll go over the answers. I hope you had enough time to go over the questions. Here are the quiz answers. What does the cash flow statement show? It shows the change in cash, so cash inflow and outflow for each period. What are the sections of the cash flow statement? Operating, investing, and financing. Now that we've covered the cash flow statement, I hope everybody has a good understanding of the importance of this financial statement. Next up, we are going to do a summary of entrepreneurial accounting.